How did you go from a mediocre student to the success you've seen over so many years?
Then I liked markets. I was a kid. I mean, school, when they cram stuff down your throat, and it just didn't interested me. Markets interested me.
The markets interested you, and the mathematics of the markets and girls. Okay, of course, we knew that, but Long Island. But the dynamics of it, the dynamics of the markets, when did that click in for you? Did it wait for...
When I was 12.
When you were 12?
Well, I caddied, and this was the 60s. And it was, that was the hottest time in the markets. Like every time you get a haircut or shoe shine, somebody would talk to you about the markets. So I caddied, and I took my caddying money and I put it in the markets. And I didn't know what I was doing. The first stock I bought was my whole criteria was it was the only company that I ever heard of that was selling for less than $5 a share.
What was that?
Northeast Airlines.
Okay, they did well.
and like my investment criteria was I could buy more shares, so if it went up, I'd make more money. That was my criteria.
How did it work out?
Well, what happened is this company was about to go bankrupt, and somebody acquired it, and it tripled, and I thought this game is easy.
So that was the start.
Right? But of course the game isn't easy.
The game has not been easy for Bridgewater. The difference is, in 07, 08, you had challenging years, and you bounced back with a vengeance. Can you bounce back now with markets at the zero bound?
07, 08 was a great year because we anticipated the financial crisis, and we did great. And then we had and so on. Recently, we missed the COVID coming, and then we got hit by the COVID coming. And so then we bounced back from that. But I think we didn't take as much risk as we could because we added value, but not as much as we should have added.
What are the new procedures at Bridgewater to be more supple in the market, given where credit markets are again at the zero bound?
Well, I don't think there's new procedures. It is the amount of risk that one wants to take at certain times. So if you take our all-weather fund, for example, I think it's up 10 plus something this year. It could have been more aggressive. The question is, in this risky environment, how much do you want to be aggressive? We're always looking at things that we can do better. That pandemic is something that we've examined, and we learn a little bit more. But by and large, it's the same, just more of it.
How do you feel the nation and our fiscal status will come out of the huge debt buildup we have? How do you believe America will de-debt?
Well, this has all happened over and over again. That's what caught my attention. When you hit a zero interest rate and you have too much debt and everybody needs money, the way it works is the government sends out the checks, but the government can't print money. So it has to borrow money from the Federal Reserve and borrow money from others. And they don't have enough money, so that they print the money. And so the value of cash and the value of bonds has negative real returns, significantly negative real returns. And so money goes somewhere else. It goes into, traditionally, equities. It goes into gold. It goes into property. It goes,
The house over there, Ray, just went up $300,000 when you sat down in the chair. Continue.
But the same thing happened in 1971, August 1971. Same thing happened in March 1933. And that was when they produced a lot more money and that monetization, which moves its way through the system. Mechanistically, the way it works. A bond, the Federal Reserve comes in and buys a bond. It gives it to an investor. That investor then in turn puts it into other investments. And then it gives it to the public through the government. So this is, that's the way the mechanics is.
This is a new Beijing. Is it a return to an old Beijing that you and I knew when you were buying Northeast Air? Or do you envision a Beijing that's moving to a new territory?
Well, you have daughter and son-in-law in Shanghai, and so we get
We're living it in real time.
We're living in real time, and the more you have contact, I think the more you understand it. I don't think it's well understood. For a long time, the question is, how can communism and capitalism coexist? That's the riddle you have to answer, and he had to answer it a while ago. And what do these people want at the top? And what the answer to that riddle was told also by Deng Xiaoping when he was asked. He said, it's glorious to be rich. And then they asked about capitalism, and he says, it doesn't matter if it's a black cat or a white cat, just as long as it catches mice. And so the idea is producing wealth. And so
but it's
capitalism,
changed.
but capitalism, yes, but the redistribution. Okay, so we have four things that are really going on in China, if you understand their intent. Common prosperity is the word now, okay? And it has been the objective to raise money and then to broaden the base of that. Okay, right. That's common prosperity. So if you look at their tax rates, they're lower than the United States. If you look at the measures of almost capitalism, they have as much capitalism or more capitalism, much more so than Europe, for example. And now they're in a prospect to broaden that. So I think there's a tendency, and an understandable tendency, to think because they are Maoist and capital and communist that they're going to go back to that kind of a thing. And they're not. Deng Xiaoping, Xi Jinping just, for example, introduced the newest stock market in Beijing. He made a point of being the one who introduced the market in Beijing to the small and medium-sized enterprises. They know that it catches mice. And so the issue is that the capitalist is not in control. The issue is that there's a system for the whole system, and then what they want to do is make sure that it's not a capitalist-driven system. So, and then there's data control, and then you have to understand there's micromanagement. It's like the kids, there's a top-down versus bottom-up. Whether you like it or not, it's what it is.
How can our listeners and our viewers prosper from their micromanagement of the real estate debt collapse we're beginning to see in China? What is the opportunity if we see their dominant investor position domestically go down in price? How do you play that?
Well, the mechanics are the same as the United States went through and everybody else went through. So it would be very similar to our 2008 mechanics.
Or recollapses or whatever.
So what we do, it's happened over and over again, is the central bank makes a decision of moral hazard. You know, they never used to have moral hazard.
Do you believe they're there right now after this week that we've seen in the markets?
Oh, they knew that this was happening, and there's a preparation for this, and they know that there's more, and that's a good thing, not a bad thing, because in the past it used to be that they would guarantee it. The banks, 5 major banks would loan to state-owned enterprises and local governments with implied government guarantees, and it was bad. So the process is the same. Expect the exact same type of process as we would go through, which is to say that there will be stung. Investors will be stung. That's how it works. And that the system will be protected because it's denominated in their own currency.